let's begin the show. And when you opt for financial strategies, it's crucial for you as an investor to understand the detailing that goes into an investment product and investment style. Now, in case of technical analysis with all the charts and graphs, how do you understand the various aspects of this in order to strategize your call in a particular stock? So let's decode the way you can use technical analysis for your investment. We have on board Foram M, Chheda, founder, ChartAnalytics. Foram, good evening and welcome to the show. Very crucial aspect of investment. So we see fundamental as well as technical analysis that's been opted by experts and even by investors. But then if you want to focus on technical analysis, what exactly do we mean by that? Is it only charts and graphs and lines and axes involved?
Hi, good evening, and thank you for having me on the show. Technical analysis is, I would say, a very broad subject, and in that, the basic thing that I would like to just share that what exactly it would mean. It's more of like, examining the financial assets, be it your equities or your commodities or currencies. So this technical analysis can be applied to different asset classes also just by examining the price and the volume data. And I would say just like the fundamentals, which would rely more on the earnings and the management, technical analysis is broadly relied on price as well as volume. So in simpler terms, it's just more of examining the historical data, what's happened in the past with the prices, if there was a pattern breakout, and similar thing that if how it acted or reacted at that point of time, a relative performance can be expected in the near future. So that's how a broad-based or technical analyst would look at charts.
Foram, tell me something. When you read a stock or when you prepare for a stock, what kind of technical analysis or what type of technical analysis do you follow? And also, what are the types of technical analysis one can look at?
In technical analysis, there would be different analysts following a different theory. One would be looking at probably the Elliott wave or the pointing figure chart. So basically, what I look at is the candlestick chart, one. And two is I look at the basic price trend. So it's very important. According to me, I find that the basic trend should be in place, be it an uptrend, downtrend, or sidewards. The prolonged trend has to be well defined to understand the basic price trend of the chart. And secondly, it's more of knowing support, resistance. That is again a very basic tool to learn, or I would say to implement, that I would do to understand that, okay, fine, if it's in a sideward range, what is the range that should be well defined? Or if the stock price is in an uptrend and it can come down, so what kind of support levels that we can expect? So that is the second point after the price trend is determined that we look at for supports and resistance. And the third is the most important, is the relative strength that I follow, and I think a lot of technical analysts follow. That helps you to decide on, it will help you to decide on whether you want to go in for stock A or stock B, considering what is the relative strength, or it can also help you to decide on different asset classes, or you want to get into equities or you want to get into commodities. So relative strength basically just tells you that it helps you to decide and clear your thought process that, okay, this is the asset class that I'm looking at, or this is a stock. I would get into it, understanding or comparing the trend of those two asset classes.
About different formation that you might see on a technical chart, what are those kind of formation and what do they actually mean? If you could just explain by giving examples.
On the chart, we would look for a pattern breakout, for example. It can be classical method, considering from a classical method point of view, there would be a pattern breakout. And as I made a mention earlier, that volume is very important. So when we look at a breakout from a pattern, there has to be a volume that needs to be accompanied. Otherwise, we can consider that there could be a false breakout. And that is how the volume supports the price. So that should be in sync. That is my way of analyzing. And when the price is moving up, and there should be a relative increase in the volume as well. So that helps in determining the trend of the stock, and as well as confirming that, okay, the stock is in line, then that's the volume that acts as a confirmation. And I also use a lot of moving averages also, that helps us to know that it's a short-term trend or the intermediate trend or the long-term trend. is well in place or not. If there are a lot of whipsaws happening around the moving averages, it creates a lot of confusion. So it's better to avoid such stocks. So that's how I clear my thought process, that I'll go to a weekly chart, drop it down to a daily chart, look for the pattern breakouts or the pattern breakdowns in order to sell or exit. And that can also help me to determine my stop losses and targets.
Foram, how back can you go on technical charts in order to track a particular stock and the journey, and also predict not predict but then analyze the ongoing movement?
Well, it's something that one is that there could be a myth that technical analysis is used for short term, but it's actually not like that. It can be used, and it's actually very much useful for long term investments also. So in fact, if it's comfortable, if it's a long-term investor, then one can even go on to a monthly chart or a quarterly chart also, in order to understand what is the price trend, or if it's likely to come down in the coming quarters, considering the results, if somebody is looking at both fundamentals or technicals. And it's like I would look at that to a monthly chart. If there are some, a monthly breakout happening, monthly breakout along with the volume, or even on weekly charts. But if there is a monthly chart and it's a breakout, say in after 10, 12 years, it's going to be very, very strong breakout, and the trend is just picking up. So in fact, it's like one has a lot of data on price and volume. So you can go up to a long historical data and check even years back, 20, 30 years back, what was it doing at that point of time, and is it possible that something similar can happen in the near future.
One last question. Can one really make good amount of profits, or just relying on technical analysis and taking a call on particular stock, is that enough, or one also needs to consider the fundamental aspect of a stock?
Well, it depends on person to person. If you are a firm believer and you would like to just go with like technical analysis, my focus main is only on technical analysis. So being a disciplined trader or an investor and just applying technical analysis can help you to make money. Fundamentals can be an add-on because what happens is that when it comes to fundamental analysis, you are looking at the earnings and the management. Whereas when it comes to technical analysis, you're looking at the trend and you're looking at the price also, and maybe it may tell you that it can come down. And which may coincide with probably the fundamental earnings also, that okay, it has not performed well, or the revenues have come down and the price is likely to fall. But that fall in price, and that where technical is also telling you that it's a support level here, can help you to give you a very good entry. And it can also be a very good favorable risk reward ratio from an investment perspective, as well as from a very short term trading perspective, or even intermediate horizon as well. So one can look at making money from technical analysis, but one has to be a very disciplined person where it comes to maintaining their stop losses, and should have a very much, I would say, a non-discretionary based thought, where if you think that, okay, this is my stop loss, it's going down and I should not continue holding on to it, I should make an exit. That will be a very, I would say, a fine way of defining a person who is managing the trade and will be even cut shorting their losses also. And same thing happens on the upside, that if the person is bought it at a breakout from technical analysis perspective and managing the trade by maintaining trading stop losses and riding that stock, that would also be considered as a fine way of making profits. So considering technical analysis, one can definitely look at making some money.
All right, that will be all. Thank you so much, Foram, for taking out time and explaining all the in-depth details on technical analysis today to our viewers.
Thank you.
On that note, let's take a quick break, but then post that, we'll be having live callers, and we'll be sorting their financial planning queries with Pankaj Matpal after this break.